Good evening, everyone. Welcome to a new episode of Investing Fool, where we talk about DIY momentum investing. It has been more than 7 months running this portfolio. So, we started in November of last year, and in December, we started publishing videos on this YouTube channel. And it has been a humbling journey since then. We have seen some average sized drops. We have seen some small corrections. We have seen the election volatility, and the portfolio has been going good. The market in general has been going good. So it is a huge learning journey, and thanks to all of you who have been part of this community. If you are new to this channel, you should know that our core portfolio, we keep the stock names, the when we are buying it, how much we are buying, everything public, fully public. So if you like this way of sharing information, then consider subscribing to this channel and becoming a part of this community. Everything is free anyway. So but one caveat is there that SEBI का एक नया circular आया है in which uh, entities would have some controls on how we are showing information. We may not be able to publicly disclose stock names, security names, and all that, which has been the core of this channel, because we are tracking a model portfolio, right? And that is why I always have this disclaimer of no financial recommendations at all. Speaking of it, we should move to the financial the disclaimer that none of the securities that we show in this video, none of the names, quantities, prices, anything, right? Although I have been personally invested in these stocks as part of my personal portfolio, but that does not mean that I'm recommending or suggesting or advising you to go and buy these stocks, right? It's your own money and you have to invest it carefully. So consult your financial advisor before you are making any investments, right? So going back to the SEBI circular, so currently what it seems like is that the circular is mostly for registered RAs and RIAs, so we may not be in the ambit of it. But in the future, in the short term, more circulars are expected to come, given how much importance SEBI has given to the kind of financial information that is shown on these channels. No matter how much you say that these are not recommendations, these are not suggestions, these are not advice, but there can be some ambiguity there. So SEBI is trying its hardest to protect small investors. All of us are like small retail investors, and that is why these circulars do come from time to time. So if in the future it becomes that even non-registered folks cannot show stock names and all, then we'll see how to take this forward. But जब तक चल रहा है, जब तक है जान, तब तक we'll keep this portfolio live. So let's first take a look at the at our portfolio, right? So we'll first discuss the June performance a little bit, what has been happening in the overall market, and then we'll go to the rebalancing bit. I think for most of the viewers of this channel, they would be waiting for the rebalancing bit, right? Because this is the end of June and we do rebalancing twice a month. So this is the time of rebalancing. It's not actually the end of June, it's the 1st of July. So the rebalancing should have been completed today, but there is a surprise there which we'll come to. But let's first take a look at the portfolio one-day return. So overall, over the last few sessions, last few weeks, the portfolio has not been performing as well as the market. Some select sectors or pockets in the market are performing better than the others, and those sectors are like in churn, right? They are moving and they're performing better when they're not performed as well for the last 1 year. So currently they are not part of our portfolio, like IT, like private banks, and other indices, right? We'll take a look at the sectoral indices also. But if we look at the gainers and losers in today's session, not much to speak about. Most of the stocks were still in green. The market was good, the market was generous, but there were laggards also. So Motilal Oswal was down 4% intraday. By the end of closing, it was 3.5% down. Torrent Power 2.4% down. It has been a continuing its horrid performance in our portfolio. And Shobha is down 2.6%. The net drop in Shobha is now 11.4%. And Shobha had started the session in positive, and realty in general has not been performing very good over the past few sessions. So in terms of sectoral indices, if we see, then IT was up almost 2% today. So TCS was up 1.5%, Infy was up I think 1.3%. In terms of 1 week change, IT is now the best performing index. In terms of 1 month change also, it is now the best performing index in the last 1 month. So the sector might be having some turnaround because IT has not been performing for some time, and let's see how it goes. In the past, we had some stocks from IT sector. So we had Sonata Software, we had Bidla Soft, which had given good gains. We had KPIT Tech, which didn't do much in our portfolio. So there were 3 IT names. Let's see if the momentum continues in IT stocks. We some of those stocks might come in our screener later, right, in due course of time. So looking at the all-time chart, if we see the alpha vis-a-vis the Nifty 500 index is still above 5%, but the performance has kind of slowed down. So the index in general is performing better than the portfolio over the last few sessions. And even if you look at the Nifty 50 return over this period, like from mid-November last year to now, it has given more than 22%. That is fabulous, right? When you take 12% CAGR for Nifty on average, and to see that on some bumper years the market just surprises you on the upside, so it has given like 22%, you are really happy, right? Everyone is happy, and everyone is waiting for when the next series of healthy consolidation will start in the market, because the market is kind of due for some consolidation for a stretched amount of time. The kind of returns that we have seen in the past may not come going forward. But again, like we are not in the game of prophecy. We are just in the game of following the market. मतलब हम भविष्यवाणी नहीं कर रहे हैं, हम बस मार्केट जो बता रहा है उसको सुन रहे हैं और उसके हिसाब से अपने पोर्टफोलियो को ट्वीक कर रहे हैं, रिएक्ट कर रहे हैं, whatever, right? So भाव भगवान छे, मार्केट भगवान छे. So let's just move on. Let's move on to the slides, right? So in June, our portfolio actually performed worse than the index. So 6.7% up in June compared to 6.9% for Nifty 500. And if we go to the MOM returns and chart, this has been updated till June. So we see we are above the index in terms of returns, but the gap is kind of, it's not going further, like the gap has kind of narrowed and stayed in a range, right? So if we see, June is probably one of our best months in terms of returns, not as good as Jan 2024, but it's still a good month. But when we see it compared to the index, it's like really horrible, right? So that's the general trend in this month, and hope July gives some better returns vis-a-vis the index. And as I already talked about, new sectors are performing. So IT is performing, some consumption pockets are performing, banking stocks are performing, private banks have performed really well. So because of this, I mean, this is the primary factor in the portfolio not performing as well as the index. So let's see if this trend continues going forward. If that continues, the stock names in our screener and in our portfolio will also change. So we'll have to keep our eyes and ears close to the ground. So here in the third point, that is the surprise for today. So I guess many of you may be waiting on why I have not discussed which stock has entered and which stock has exited. And it is because the simple plain fact that there is no change in the portfolio in this rebalancing cycle. So we had one bi-weekly rebalancing on June 15. I think we did it on June 18. 15 the market was closed, and NTPC had exited at that point, and Shobha had entered the portfolio at that point. But now in the end of June rebalancing, all of the losing stocks have not lost enough to be kicked out of the portfolio. So we have stocks like Thermax, we have stocks like Torrent Power, not good gainers, not extensive losers. And because momentum takes a view of the past 1 year, right? So we are looking at the past 1 year, and then we are taking a bet that, okay, the stocks that have performed well in the last 1 year will continue to perform in the next 1 month. If they don't perform, like their rank will drop and they'll be kicked out of the portfolio. But that is the bet that we are taking. So it is so sometimes you might feel that, okay, why are there are new stocks like Motherson, there are new stocks like GRSE, which will talk about, they are coming into the portfolio, they're showing strong momentum, then why am I not in those sectors, right? So you have to have the right amount of patience when it comes down to momentum investing. And I always say that less churn is good, but again, there is always a trade-off. In terms of less churn, you cannot say that, okay, to have less churn, I will rebalance like once a year or something. Then you will lose all the benefits of momentum investing and continuously rebalancing your portfolio. But and if you do it too often, like if you're rebalancing daily, then there would be so much churn that all your costs will be gone in transaction costs, right? So you need the right amount of churn. You need the right amount of patience in terms of momentum. So sometimes you may think that ki matlab some new stocks are coming in our momentum screener, because losers are not exiting my portfolio this time, so I cannot take any new stocks, right? So you might take an additional capital and deploy in those stocks. All those dhanda will not do much in the long run. Everything evens out. So just stick to the strategy to the T. And if the strategy is saying that there is no exits, it is not giving any exit signals, then do not exit those stocks. And if you do not exit those stocks, then obviously you are not entering any new stocks. That is where the story ends. Basically, that is where the rebalancing cycle for you ends. The next rebalancing we will do on July 15th. So we will take a look. Then we'll take a look at the new performance. Then whatever. If we had to take like 2 new stocks today, if 2 stocks had lost out, then we would have taken Motherson and GRSE. So GRSE is Garden Reach Shipbuilders and Engineers Limited. If we take a look at the market cap distribution, right, because we are not changing anything, the distribution amongst large cap, mid cap and small cap remains same. At large cap at 50% or half of the portfolio, mid cap at 35% of the portfolio, and small cap at 15% of the portfolio. This is the number of stocks, not in terms of their exact weightage, but like small caps we have 3, so 3 by 20 into 100, right? So that is 15%. So so no change in the core portfolio, but there is some change in the Nifty 10 portfolio, the Nifty top 10 portfolio. So Nifty top 10 portfolio saw 2 changes, and let's take a look at this portfolio. So we have 2 exits, and there is a whipsaw kind of effect in terms of Tata Motors going out in May, and again it is performing well, and it has come back again in June. So in June we exited 2 stocks, which is Adani Ports and Hindalco. Both of these have actually given gains, like they've made money for us. पैसा गवाया नहीं है इनमें, but they have not other stocks have a better claim to the spots that these have lost, right? So these have gone beyond the top 10, and Nifty top 10 portfolio is a kind of a high churn portfolio. There could be a lot of whipsaws. Because we have not kept any buffer, like whatever is out of the top 10 we just kick it out, and whatever new stocks comes in we take it in. Monthly rebalance, it will sometimes give out a lot of churn because the criterion is so strict, but no, we are not revising it now. So we will have 2 stocks out of 10 stocks, right? So almost 20% churn every month it is happening. And if you look at the comparative returns vis-a-vis the Nifty 50 index, then we are at 9.6% return now compared to 8.1% for the index. So not a major alpha. It's like 1.5% above the index, and this is too short a time period to even say that this is an alpha, right? It should ideally be said over periods of 1 year. But in the past we had seen that we were at 9.4% or something, and the portfolio was at 4.6%, and the portfolio suddenly crept up, right? And now the difference is very smaller. So that I've always said this, that it is difficult to beat large cap indices consistently, and that's why if you are a mutual fund investor, you should know that 80 to 90% of large cap active mutual funds underperform the index. So probably the best bet in terms of if you want to go the passive way, that is probably the best bet that I can say. Again, not a recommendation, not a suggestion, I'm not a registered financial advisor, but probably a 50-50 mix of Nifty 50 and Nifty Next 50 can keep you in good stead compared to most other active large cap funds. But coming back to our portfolio, so we kicked Adani Ports and Hindalco out, and in their place we have two new stocks, which is Grasim and Tata Motors. And as I said, Tata Motors we had exited in May only, so some sort of whipsawing will always keep happening in if the criterion is too tight for your portfolio. But that is a trade-off that we have taken. Okay, let's go back to the slide. So we talked about the potential incomers in the next cycle, so we will take a look at these stocks again on July 15. So Motherson and GRSE currently are performing really well, and we can take a look at the chart of GRSE here. So if you look at the other defense companies, they have been performing handsomely over the past few months, right? But if you look at GRSE, it had a good run up here, but then the price stayed stagnant for quite some time, and this year after April it has again started this amazing rally upwards, huge green candles. So the price to earnings is still close to what there is for Cochin Shipyard, and RSI I have not checked, maybe I should check the RSI for GRSE and what it is for Cochin Shipyard. So let's take a look here. In peer comparison, we have the RSI. Yeah, so the RSI is 79, right? It's clearly, even if it is overbought, definitely overbought, but it is more bought than Cochin Shipyard, right? So something has happened. The market is looking at some order book news, something, and even Cochin Shipyard had some good news a few days back. So you cannot always differentiate that, okay, good news is coming for this stock and that is why it is reacting. You don't know the reason, so don't always try to find the reason for why the price is changing. It is a different kind of mindset from what we here practice in terms of a momentum investing, right? So we are not trying to find the reasons for price change. We are trying to base our decisions on price change, right? So that is how we will look at it. So yeah, so if you are a momentum investor, you can look at this stock. It is it should be on your radar, and we'll take a look again by July 15. I hope it consolidates some bit and it still stays in the ranks so that we can lap it up again. But I'm also wary of the kind of the kind of concentration the defense as a sector will have in our portfolio. We already have like 4 stocks, and if this stock comes, it would be the 5th stock, right? So that is something that we need to keep in mind. Anyway, that was all for today, and it was kind of a dampener, I guess, because many of the viewers would be expecting some new stock would come, some new entry would come, some new exit would come. But investing and even momentum investing does not have to be exciting all the time. It is not there to give you the kick. It is not there to make you excited, right? Sometimes boring is good, and that is how we should stick to the investing. We should always have a long-term mindset. And just reiterating, none of these are financial recommendations, so do your own due diligence. And if you haven't yet, subscribe to this channel. See you in the next video. Bye bye.